And with that, let's see what else is on the topic board on the hot list for the week. This is a name that I think most of our viewers, if not all, are familiar with, and that's Ford, ticker symbol F. Let me guess. Are we saying a buy opportunity?
I think we are, and I'm not ready to pull the trigger right now, because I think it's going to come back. I'd like to wait until it comes back down. It kind of got excited on earnings. I'm a big fan of having Ford in my overall long-term portfolio as well, and that's what I've got. But so I don't mind accruing Ford because I think that that's a good symbol to have in the background of your portfolio. But I'd like to see this pull back, right? We got these signals, and these signals brought us back up to what I call the center zone of the channel. So if I were to draw support and resistance on Ford, I'd probably draw my support around $12, maybe $12.10, although I don't typically like to go on those, um, not really round numbers. And maybe $13.25, something like that for resistance. And so you can see that I got my signal. My signals are end of day. And then before you knew it, it was already above my price target. So what I'm looking to have happen is I'm looking for Ford to pull back and give me another opportunity. I want to purchase Ford somewhere around the $12 mark, maybe 12 to 12.50. That would be my ideal place to purchase it, but I don't want to purchase it unless I get a bottom reversal signal as well. So I want to get a good bottom reversal signal and purchase it around the 12 to 12.50 mark. And that would set me up with the Ford, not only to have this at a good price in my portfolio, but it would also set me up really nice for going forward with Ford, and selling call premium and buying protective puts and turning that into an income stream on Ford. So one idea that I've got for Ford is using cash secured puts. So Ford offered some interesting dividends, which threw off their strike prices. But if we look at the May 17th option, there's some different strike prices here. I'm looking here at, and again, I said maybe the 12. So if I was willing to pay $12, I mean, right now, I could get 11.5 cents for putting it out there that I'd be willing to buy the stock at $12. So, I mean, 11.5 cents doesn't sound like a lot, but when you then take that away from the $12 mark, if you're willing to pay 12.50 and you say to somebody basically, I'm willing to pay you 12.50 for your shares of Ford, they would give you 27.5 cents up front. And then sometime between now and May 17th, they decide whether they want to actually sell you the 12.50. No matter what, you keep that 27.50 or that $11.50, per contract, no matter what. So you can use that if you actually do buy the shares of Ford to offset that price and already put yourself into the black. But that's a good way to acquire, underlying stock to then sell premium against, is to do these naked puts or cash secured puts. So if you don't want to wait for it to drop, you can go ahead and put that expectation out there and say, hey, I'd be willing to pay you $12. And for that obligation of me agreeing to pay you $12 for that stock anytime between now and the third Friday of May, you're going to give me $11.50 for every contract. I mean, it's just free money, and it puts it out there as if you've done a limit buy order at that price. So that's the way I like to buy stock.